We've made it to the end of the chapter. We just have the last section to do. There's a big disconnect, if you ask me. They talk about adjusting entries. My personal opinion, but again, I'm not the textbook writer. I personally thought we should not only have journalized them, but posted to the general ledger, and they don't have us do that in this chapter. Rather, they just make the adjusted trial balance and move forward. So this didn't happen, and it won't happen. So you don't have to post, is what I'm saying. Maybe you like that. Okay. In this section, then, we use the adjusted trial balance to make our 3 financial statements. You will do this at the end of chapter. You will do this on the test. What is an adjusted trial balance? We have a trial balance, but an adjusted trial balance is, of course, prepared after the adjusting entries have been journalized and posted. Yes, we did this. No, we did not post in this chapter, but you really would. It does prove the equalities of the debits and credits, and it is used to make financial statements. So there's the trial balance and there's the adjusted trial balance. This one is correct. This is okay. This is correct. The regular trial balance, although it equaled, didn't tell the whole story because we've used supplies, we've used prepaid insurance, we've used those things up. Here's the process. We journalize and post to the general ledger. That was last chapter. From there in the general ledger, there's all the little accounts, and we create a trial balance. That truly was all of chapter 2. In chapter 3, we learned that, yeah, you're going to journalize. What? All the adjusting entries, and there's many types. We've learned that. You would post to the general ledger again. This step, although it is real, didn't happen this chapter. The book just skims over that. Again, we're updating the ledger. And from there, we do an adjusted trial balance. Although the trial balance debits and credits equaled, and the whole purpose is that the adjusted trial balance, the debits and credits equal, this is real. This isn't the whole story. Although the debits and credits equal, we know that things were used. That's why we have to adjust and keep going. From there, we produce the 3 financial statements. Done in this order: income statement, owner's equity statement, balance sheet. You've done those in previous chapters as well. But now they just have a little bit more to them because of adjusting entries. Here's our adjusted trial balance, meaning we've done the adjustments. They're highlighted in red. This is what you will look at for the test to know what adjustments you have to do. Like, look at supplies. Changed by $1,000. What account goes with supplies? When we use supplies and they go down, what's our debit? Supplies expense, which should also be, am I looking at it wrong? 1,000. Isn't supplies expense? Isn't it 1,500? I don't know why that's wrong, but again, could be an error in mine. Here's our 3 financial statements. They absolutely need to be done in this order. Income statement shows revenue minus expenses. Hopefully that yields a net income. Owner's equity is what we begin with, plus some stuff, minus some stuff to show what we end with. And then balance sheet is assets equal liabilities plus owner's equity vertically. From each of them, we take out something and sprinkle it into the next. We take out our net income and drop it in here as one of the pluses. We take out our ending owner's equity and it shows up under owner's equity. We're going to highlight those as we do them today. This, I think, is complicated looking. Do you have it in your notes? But it's basically just showing the adjusted trial balance and then where you shove the numbers. It's just a visual for you on paper instead of in your book. Then of course we make a balance sheet. The big change in balance sheet is equipment. You didn't know about depreciation before this chapter. You own, in this case, $5,000 worth of equipment, minus the pile, minus the what's called the contra asset that offsets the value. So equipment is really only $4,960 because we lost $40 in value by using it. Unlike supplies, it's not gone. The paper and the paper clips aren't gone. We still are driving our beep, beep, beep equipment around. It's just that we've lost $40,000 of selling power on it. Let's do this. I think that's what's really going to make it understandable for you. We're together going to do exercise 3:14. You can find it in your book on page 141. I would assume it's in your workbook as well. 141 in your textbook. I can't speak for where it is in the workbook. Thank you, 92. We're going to make financial statements. Are we going to use the trial balance or the adjusted trial balance to do so? Adjusted. Why? Is that the full story or just part of the story? It's the full story. We start with income statement, then we make owner's equity statement, then we make the balance sheet because we're pulling from one to drop in and build the next. You have to go in that order for it to make sense. Okay, I'm on page 141. It says, the adjusted trial balance for frenzy is given. So it's the one above. Do you see the frenzy one that we analyzed before for 313? Now we're actually going to make financial statements based on what's up there. They are in order of balance sheet down to income statement. So do we see cash, AR, supplies, insurance, equipment, accumulated? Those are all assets. We see AP, salaries and wages payable. We see unearned revenue. Those are all liabilities. Finished with owner's capital. You'll notice what I do in my book. You can't do it in yours because you don't own it. I do. But I draw a giant line through it to show what's income or what's balance sheet, what's income statement. Unfortunately, you can't do that. On the test, you could though. Okay. So we need to make an income statement, kind of like the ones we've done in the past. I'll have like headings and it will be like a table. So it's really clean. Do you prefer that? Okay, because on a test scenario, it's not beautifully lined and tabled out with columns. So let's put in our first heading. Is the heading there by chance in your workbook? No? So is it line 1? I want you to put revenues. Notice there's 2 of them. Is it line 1? Right. Oh, it is. Oh, so the word revenue is there. Perfect. How many revenues do we have? Look on that trial balance and adjusted trial balance. How many revenues do we have? Remember, unearned revenue is not revenue. That's a liability. We have 2. So let's list them. Which column should we technically use for our numbers? I honestly would put these in the left column because there's more than one. We need to do math. Now on a test, if you didn't do that, it's not the end of the world. I just like when there's more than one, we use the left side to calculate out our math. So remember, we are not looking at the before column, we are looking at the after, or the adjusted trial balance column. Tell me, did service revenue stay the same, grow, or shrink? It grew by $2,000. You would use the 36 because this is after things have happened. Rent revenue also grew by $900. So then we would single rule that, and I would actually prefer total revenue. I'd prefer this 47,900 over in the right column instead because we're done with our math. I am not so worried about all this indenting over here. I think indenting sets it off and like it's easier to read. So if you like to indent that way, I am completely fine with that. Do we get to keep all that money? The expense recognition principle tells me that expenses have to go with revenue. And we have a pile of them. We have a lot of expenses that have happened. So on, let's see, that was line 1, 2, 3, 4 is on line 5, the word expenses. Give or take. Okay, do we have a bunch of them? We do. Remember, we are doing everything that's after the adjustments. And so stuff that starts at 0 but ends at something, it's after the adjustments. They seem to be in the order. No, they don't. They seem to be in largest to smallest order. Would you agree? When I did the problem at home, I put them in order of the trial balance. As long as they're there, I don't necessarily care what order. These are not in alphabetic order. They're not in order of the trial balance. They seem to be in order of largest to smallest value, which I can see makes sense. But as long as the 2, 4, 5 expenses are there with the correct numbers, that's what I'm happy with. Remember, we're using single rules. Why have we not double ruled anything yet? You guys remember single and double ruling? Why have we not double ruled anything, Carrie? We're not quite done with our math, are we? We've got revenue minus our expenses, as Carrie just described, and then we are. So we do have a total. I'll just give you the number, 36,900. That's really eaten up a lot of our revenue, isn't it? Why could I put that 36,900 out on the right? Am I done with my expense math? I am. Okay, when revenues exceed expenses, we have what's called net income. Net loss happens. It absolutely happens, especially for young businesses. What I have seen in this book, most of your work will yield a net income. Okay. So we'll put the word net income out on the left, almost like as a heading. And then we're going to look above here, 47,900 minus the 36,900 equals an $11,000 net income. And because we are done with our math now, we can double rule. Old school accounting teachers would make you literally get out a ruler. And so modern day, I guess. At this point, I'd like you to find a highlighter. out of everything that we did on that page, what number needs to get shoved to the next financial statement that we do? 11,000. Highlight that. What warms my heart is when you actually highlight on the test too. I'll usually put a little heart there because I love that. Because my little visual tricks helped you. All right, 3 financial statements, check, 1 is done. Which one are we doing next? You could cheat, not cheat, I hate to use that word, but you could look in your workbook to see which one's coming next. Owner's equity. Are we going to use that 11,000 somewhere on the owner's equity statement? We absolutely are. Oh, gotta move my. All right, so owner's equity is next. Remember, with owner's equity, we take a look at what was owner's equity to start our fiscal year, what needs to get added to it, what needs to get subtracted to it, and then we're left with the end. Do you have a heading here? Nope. So we've got our owner's capital, comma, September 1. I'm okay with even the word beginning, if you remember, using that in the last chapter. Either one is fine. Where are we getting 15,600? Where are we getting that number? From the trial balance. Megan's got it. So do you see where it says owner's capital and it says 15,600? That is what we went into the fiscal period with in that amount, in that account. Sometimes it's 0 if the company's starting out and has never had an owner's capital balance. You see a few things added if they invest more. Like for example, if that had been 16,600 at the end, but it started at 15,600, that means they invested $1,000 more, but they didn't have any additional investments because it started at 15,600 and it ended at 15,600. So you got to be kind of careful on that one. What does the owner get to keep from the previous financial statement? Net income. They get their $11,000 share. So we're going to add net income. If you would have put a plus sign there, I'd be okay with that. I would definitely put a plus sign out here. What's a hit against owner's equity, typically? Drawing. Do we have any drawing? We don't have any drawing on here. So I'll even have some students put minus drawing and they'll plunk a 0 out here just so they like get in the habit of we add net income, we subtract out drawing. My example doesn't show it because there was none. But if you want to put minus drawing and then put a minus 0 over here, you are welcome to do it. It's not like you'd have points taken off though on a test. So now we've got owner's capital, comma, the end of the fiscal period. They started with 15,600. We added what came from the other statement to end with 26,600. We're done, so let's go ahead and double rule. If, in the spirit of highlighting stuff, you want to put a highlight on that 11,000 that it came from somewhere else, that was brought in from somewhere else. That's supposed to be an arrow. It didn't make an arrow, but that's okay. And then maybe if you want to switch up pen colors, it's up to you. We're going to take this 26,600 and put it somewhere else as well. We brought in the 11. Now we're taking the 26,600 with us to the next and last financial statement. Do you see how it would be really easy to put 15,600 on the balance sheet? Yeah, but that's not the full story. That's why we do them in this order. Your balance sheet's the last thing that we'll do. Do you have the word asset in there? Okay, sweet. Are there 2 columns? Okay, perfect. I want you to go all the way through prepaid insurance and stop. As far as columns go, we've got our left and our right column. What are we reserving our left column for? Equipment, the contra asset to offset the value of that equipment. But just get through prepaid insurance and we'll stop there. When it gets down to the nitty gritty, on a test, if you didn't use the right column, it's not like I'd totally mark you off. Okay, so our other asset hanging there is equipment. How much is our equipment value? $14,000. What is our accumulated depreciation on that equipment piled up to? $45,000. Now we're not getting rid of our equipment. Unlike supplies, it's still here. It's just that we've got this contra asset setting off the balance. So now is when we're going to use the left column. We're going to say equipment is $14,000 minus the accumulated depreciation on the equipment. Remember, that has a credit balance because it's a contra asset account. Assets normally have debit balances, but because this is offsetting the value, then we're going to subtract it. So you can take your $14,000 minus the accumulated depreciation pile and put that floating balance, if you will, of equipment over back here in the right column. Does that make sense? What can I still answer about what just happened? What can I help with? Why are we not putting the before the adjustment in? Why are we using the 4,500 with after? Time has happened. Okay. The deferral has occurred. It's a prepaid expense because now time has gone by and the event caught up. So now we can take our assets, cash plus AR plus supplies plus prepaid insurance plus this $9,500 to say our total assets equal $34,100. Why are we double ruling? Because assets equal what's going to happen next. What's L plus OE going to be? 34,100. Hopefully. I pulled my hair out last night as I did the practice test, but I found out the practice test had errors. So that's why my stuff wasn't adding up. All right, you've got another heading that should read liabilities and owner's equity. True? Put the word liabilities out on the left. How many do we have? Don't forget about the one that's not named payable. How many liabilities do we have? 3. 2 are named payable. Why is unearned rent revenue a liability? What do we owe? A service of rent being available. Okay. Which column do you think we're going to use? Since there's more than one. We're going to put them in the left, but of course my answer key puts them in the right. I would put all these 3 numbers in the left column instead. So 58001100 I would put those in the left column if I were you, just to visually see the difference. Then you can say total liabilities, and I'd put the 7,500 over in the right because our math is done there. We are not double ruling just yet because of the word and. We've got to calculate our equity as well. What's the next heading you think we're going to use? Owner's equity first. I want to show you a way to remember that. Assets, here they are, total assets. Liabilities, here they are, and total liabilities. Owner's equity. So the headings kind of match each other. The account that shows up under owner's equity is owner's capital. That number is forced math that can be pulled from the previous financial statement. That is where that number came from. It's from a financial statement we did previously. Your numbers won't work out if you put what owner's capital says in the book. We know that owner's capital is more because we pulled it from the owner's capital statement. Owner's equity statement, excuse me. Now we can take our liabilities plus our owner's equity to hopefully equal the same as what our assets did. And voila, the chapter is done just like that. What you're about to see in problem A and what you'll do in problem B is what the practice test and what the actual exam will be like. It'll be, this half will be like that, and the adjustments will be pulled from a table like what you see on page 141. And you'll have lovely forms to use instead of just writing it on a blank piece of paper. And that's something that the college professor does as well. It's not just me spoon feeding, it's what she does the same thing. What questions can I answer before we get into, we're going to get ahead of ourselves here. That's a good thing. Any questions before I stop the recording? Yes, Carrie. Yes. The problem is time is going to stop us today, but I think we should get started today. Yeah. So I'm going to stop this recording.